Well, time to have a look at markets now. Asian markets closed lower, and this is after U.S. markets happened to notch some gains on the back of the U.S. inflation numbers, which came in better than expected, and they indicated that perhaps inflation is not to be feared at this point. We don't know. We'll dissect those figures and what they mean for the Fed and for the market going forward, and we'll do that a little bit later on with our market watcher. But when we look at the broader markets in Asia, Chinese markets closing lower, Hong Kong index down 1%, and also we had Japan negatively impacted as well, closing in negative territory. When we look at what's happening in Europe, it's the lingering fears of the increasing COVID numbers that are spreading in that particular area, and investors particularly concerned about what's happening on that front. And this is despite the fact that we had positive sentiments from Wall Street yesterday. When we look at what's going on the US side of things, there are going to be three key pieces of information. Let's look at it from two economic data coming out. That is the U.S. jobless claims figures as well as the July PPI figures. And we're also expecting company results from Disney that are set to report later on U.S. time after the market is closed. Locally, we had numbers out of Exaro and MTN. We're going to have the interview with Exaro a little bit later on in the show. You can tune into that. But to talk to us about some of the themes playing out, we are joined by Patrice Rousseau from Ashburton Investments. Patrice, thank you so much for your time. So the JSE at around 10:20 this morning, we were down probably 0.4% when you look at the all share index, and also the top 40 index also was lower at that particular time. How are we looking right now?
Yes, I think a tad lower, Anastasia. Really overnight, again, some saber rattling in Asia, led by more news of regulation by the Chinese internet regulator, he's really putting the boot in to the tech companies. They're now talking about regulating the online insurance sales in China. So that market really, and Asia, under pressure. And then, as you mentioned earlier, some news from the US, if you look at inflation numbers, quite sticky at a very high level, record highs at 5.4%, which is also not great for markets. And finally, if you look at as you talked about in terms of the COVID numbers around the world, these a little bit worrying and signs that we might need further lockdowns in countries which had started to reopen.
Let's talk about China for a second. And, there are concerns that this might continue for the next 3 years or so. When you look at China, are we looking at it wrong? Are we looking at it from a Western point of view and not trying to understand what the 5-year plan is for China?
I think the reality, Nastasia, is that the Chinese regulator really are trying to control their population, and as a result, they're trying to put restrictions in the way their companies behave. And this is leading to quite a big discount between what internet companies are trading at in China versus what you see in the rest of the world, especially the US. There was always a risk, and I think we got a bit too comfortable with that level of risk. And now we're starting to realize that at the end of the day, this is not a free market. This is a centrally controlled market where the regulator, at a drop of a pen or drop of a hat, can really destroy your business model. And this is what investors are grappling with, because it becomes very unpredictable if your business model can be really crushed overnight simply by the regulator saying you're not allowed to sell a certain product or charge for a certain product or behave a certain way online.
Right. So MTN published their numbers a little bit earlier today. The share price right now up 5.7%. What did you make of their financials?
Yes, noisy numbers because they incurred some foreign currency losses when you look at them in rands, but in constant currency, which means you adjust for the currency moves, 24% in terms of earnings movement over the period. So even the headline earnings per share up 13% if you adjust for these losses. And then if you take a more normalized view of earnings, that's up almost 30%. I think the big news is also they were able to repatriate, meaning taking money out of some of the more difficult jurisdictions, 9 billion in total and 4 billion from Nigeria, which means they're reducing their debt burden. So very good news. The market has taken that positively and pushed the share price higher, despite the fact that I think the share price this year alone is up close to 90%.
So our local banks are set to release their financials. Nedbank kicked us off. Over the next week or so, we're expecting Standard Bank and Absa to follow suit. What will you be looking for as a broader theme for the banks?
Yeah, very good question. Nedbank kicked off the results season, beating the market expectation. And really, it's one feature, which will be the feature across all the banks, is the reduction in provisions that they had made last year for COVID. So in the case of Nedbank already, we saw a 4.4 billion reduction in the bad debt provision, which has pushed earnings higher and allowed them to pay a dividend. I think the rest of the banks likewise will show strong earnings growth from a very low base, driven by the fact that these COVID provisions and their worst expectations for economic growth declining seems to have been overly pessimistic. Things seems to be normalizing, and the credit position of many of their big corporate clients and even retail clients seems to be improving gradually, which allows them to reduce these provisions.
Patrice, thank you so much for your time. That is Patrice
Pleasure.
Rousseau, the Chief Investment Officer at Ashburton Investments.